Hi everyone, Kay Kim here from Traders Club. Thank you very much for tuning in today. Today I'm going to be doing a weekly market update. I'm going to be looking at Dow Jones, S&P 500, and NASDAQ Composite using the ETFs. This one, you know what? I am not going to tweet it. I'm not going to share it on our Facebook or the Google Plus. This is going to be all for you guys, for those of you who follow my blog, and for those of you subscribe to me on my YouTube channel. So I want to thank you very much. And let's get started here real quick. We are currently looking at DIA. This is Dow Jones Industrial Average ETF. We're looking at daily chart here. And what's kind of a notable thing here is this candle pattern here last 3 days. That could be a Morningstar reversal if this would have happened somewhere here after a bearish run. But when it happens after a bullish run and in this channel, it actually loses a lot of its power. So which means I do see something like coming back up here and kind of test this resistance level on Monday for sure, probably Monday, and see how it's gonna react. But I don't think this is gonna be a catalyst for another huge bullish run. I know that many people might be looking to see another bullish run, but currently though, last Friday we closed with very low volume, which means this move doesn't have much support, doesn't have much backbone, if you will, to push through it. And that doesn't mean, that doesn't mean that it can't. It's certainly could, but possibility of that happening is not as high as if you had a high volume, because it gapped up, and many times you see that when there's a gapping area, there's a high volume action. Even the day before on Thursday, with just a little tiny gap and with a tiny spinning top, but we had a high volume. But the day after, we had a bigger gap, bigger candle, but smaller volume. So you can see that there isn't much push there. But anyhow, that if you want to see some bulls coming in to make a run to maybe 143 or 142, you want to see next week, sometime next week, that it close above that the resistance level with some volume spike. Then I would say, hey, you know what, we probably could make another, we could try to make another run to 142 and 143 area. However, if we continue to grind this level and just make, do up and down situations, and I don't think that's too good for bulls, because like I mentioned before, it's not like a stock. Stocks could consolidate, and then they could make another run, and that happens a lot in stocks. But for some reason on these indexes, they don't like to do that. They don't like sideways movement. They when they move sideways movement, it essentially become very solid resistance level, and once the resistance level is established, it is imminent that rollover comes. At least a steep correction move usually happens. So you know what I mean? So that's what I'll be watching at this level, see if that level is going to hold. Otherwise, if we find a doji here or maybe a spinning top on Monday, I wouldn't be surprised on Tuesday, Wednesday, we come back down to test this level, and we could just consolidate, maybe possibly making triple top or double top. But you know what? Also, what it almost looks like is, though, I thought, hey, maybe it kind of looks like we're doing something like this here, but it's we're progressing here. We're going higher here, even though we're consolidating a tight trading range. We did made going higher here on this action, but here we're essentially making sideways movement, and we actually dipped lower on last Thursday. So I'm not sure, because at first I thought, when we're doing something like this, when I saw something like that, I thought, hey, it almost looks like this. What we could do is we could have a pullback, down, and then we could have pullback down, and then another push about a week or two here, and that's kind of what I was talking to my VIP members, that could actually happen. But looking at what's happening currently, though, we're essentially moving sideways. So I don't know if that, that could happen, but I'm really interested to see interested to see how it's going to react to this level on coming Monday. If you go to weekly chart actually do look more bullish, because if we this pattern is what we call as a stair step continuation pattern. Obviously it hasn't been confirmed. To confirm, we need to close above that resistance level with some volume spike. And again, this is a weekly chart, so we won't know until next Friday after hours. But you know again, it's just moving sideways right now, and so it's a very tight rectangle pattern. And here this almost looked like a here looked like a sideways movement, and it all kind of looked like a stair step continuation, but really it actually became just mini double top, and the ETF, and essentially made a good size correction. And here actually this here looked almost like a bullish pennant, which never really worked out, and then made a correction. And here we have a stair step looking like pattern, but could make another correction, because like I said before, for some weird reasons these indexes don't like to go sideways. I'm telling you, if this was a stock, or like if this was like a I don't know, Bank of America or something like that, if we form something like this, that's definitely a bullish a pennant. You know what I mean? Usually it breaks above, and that has a high chance, 65 to probably about 70% of chance. That's what usually happens. Here, same thing. This almost looked like some kind of a before this candle, it almost looked like a bullish continuation pattern, bullish flag, and here looks like stair step, which that's why I said it looks more bullish. But the indexes, though, they don't play out as well as the stocks would do. Let's go to SPY here real quick. SPY, essentially pretty much same thing, similar action here. We did close above 10 and 20, and we probably gonna come back up here and test 153 level. Last Friday we did close with the low volume, so that's the concern. I mean, look at Thursday's candle and how high the volume was, and you know what I mean. The Friday's candle, we even gapped up a little bit here, and yet the volume is almost half of that. So I mean, this move, how much can it push without the volume? That's the question. And what I do see possibly happening is maybe a small spinning top candle on Monday, maybe a doji or something like that Tuesday, and with the little small volumes like this, and could be forming a I don't know, maybe a bear flag, or even could be forming a mini double top here. Again, I'm just kind of assuming right now. I don't have a data to conclude that that's what's gonna happen, but for sure I think we're gonna come back and test. And I think unless there comes some solid bullish candle with volume and push through this and closing above it, if we still fizzle around in this level, I think bear is going to be waiting around to attack this thing once again. Let's actually go ahead and look at MACD on SPY, see what we can find here. On MACD on SPY, you can see that it's been curling down. Okay, essentially stock's been or this ETF has been moving upwards, but ever since this level, this has been actually moving the other way. You know what I mean? This could actually pass for bearish divergence, but it's not clean. So I think it loses a lot of its power, because it's not making clean peaks. It's just kind of grinding action. Same with the MACD here. You want to see some clean divergence. It would have to be clean peaks to peak and clean peaks to peak. Meeting, make the stock making higher highs and the MACD making lower highs. But again, there's a sentiment. I mean, in this MACD here, there's a sentiment of bearishness, but I don't think it's quite as strong. If it would have been as a just stronger, just strong, like this, and like this divergence, we don't have that. But we still do have the directional divergence, so that's something to watch out, because and you can see that once there is correctional move, it could just start to roll over. However, if you look at here, we did have, you know what though? That wasn't divergence though. You can see that it went up and MACD went up, but when it came down, MACD came down with it. So it wasn't really a divergence. So and then we found some support at this level, and then it went up. But the difference of that here is we went up, but what happened? MACD came down. So that's when cautious signals are start to flare. So let's go to QQQ here real quick. QQQ is the weakest index out of 3. Just did nothing. I did more intensive analysis, I think, last a few weeks ago. We essentially filled the gap here last Friday, and let's go. Let me look at different there. Let's look at this chart here without the MACD. So you can see that the 10 and 20 has been just support here for some time here, maybe a week and a half or so. I'm not surprised if 10 and 20 is going to become a resistance level, so you could kind of fizzle around in this vicinity. And if we push through this and close above that, and we could try to come back to test 6, 8, 10 area, or you can see how low the volume is. Just like what I said in SPY, we could have a little, I don't know, spinning top or even a doji here somewhere, which means it creates that we got lower volume here, creates that bear flag formation. Stock is going up, and but with very low volume, and essentially it rolls over. Or we could be forming a possible double top area at this level. And again, I am assuming things right now. I don't have any data to conclude that that's what's going to happen, but just because we have a low volume last Friday, and I have a feeling that we're going to have a follow through a bullish run to test the 10 and 20 EMA here, but I have a feeling that we're going to have another low volume, which then creates that bear flag. And when the bear flag is confirmed by breaking that, that initial support line, it usually go further down. And if it does go further, then I think next probably target is like 65, 68, which is that 100 SMA. And essentially we're probably going to fill this gap, but we'll see how we react to that 10 and 20. Watch that level, and I'm going to watch the 6, 8, 10 level here, come back and test. If you see a weakness here, definitely going to form some kind of double top, something like that here, and then falls back. So let's real quick look at MACD. You know what? Let's look at the EMI. See what we find in the EMI here, because we haven't looked at it today. So we're still looking at QQQ daily chart. We're looking at directional movement here, also known as ADX. You can see that we got bottomed out here, topped out here. You know what? Here, this is what I want you to see. Stock essentially went up, and ADX ever since here there was divergence, right? Because it's continued to tank. And what happened last 2 days, we had this bearish run, and DMI really liked that move. DMI is really supporting. I mean, just whole, about a month and a half, DMI just really didn't like that move. Just really like, I talked about it a few videos ago, and I said it's almost look like a limping right shoulder. It's a broken, limping right shoulder, barely hanging around because I don't see any strength or trend. That's kind of what is showing. This DMI is showing us right now. And last 2 days we had this bearish run, just 2 days, okay, and we made this DMI just go back alive again. I mean, it's been dead for a while, and all of a sudden, boom, it really likes it. So, and with the low volume on this candle, I'm still very bearish on QQQ. So I think that does it for the weekly market update for this week. Hopefully though, you guys trade safe next coming week, and hope to talk to you on Twitter, Stock Twitch, or on my blog. Thank you very much again following my blog and listening to my analysis. I appreciate all you guys. And have a great weekend. Have a good time over the weekend. And we'll talk to you soon on Monday. Have a good night. Bye.